Good day, management, investors, and all participants online. Welcome you all to virtual earnings call for Thai Union Group third quarter of 2021 result announcement. Today, our key speakers are Mr. Ludovic Garnier, Thai Union Group CFO.
Hello, good afternoon, good evening, everyone.
Ms. Narisa Pahunrat, Group Accounting and Controlling.
Hello, everyone, and good evening from Bangkok, Thailand.
Ms. Kewali Thongsom-Ang, Head of Investor Relations.
Hi, สวัสดีค่ะ
And myself, Ruchirada Kongrod, from the Investor Relations team, and asked for the MC for today. This event will be approximately 1 hour with a presentation of 45 minutes, followed by 15 minutes for Q&A. Please do note that this earnings call session will be conducted in English. For any participants who have any inquiry, please feel free to submit your question in the chat box. We will raise them during the Q&A session post the presentation. And just a gentle reminder, please mute your microphone during the presentation. Now, please allow me to invite Mr. Ludovic Garnier, Thai Union Group CFO, to start the briefing. Thank you very much.
Hi, good evening, everyone. Again, very happy to be with you tonight. I think we have overall some good news to share with you. We have a strong Q3. I think it's quite aligned with Q1 and Q2 already. But let me jump maybe into the details, okay? So shall we move to the first slide, please? Next one. So overall, you can see here our numbers, KPI. We believe we have a strong Q3. Top line is interesting. Gross profit is increasing. OP and net profit overall are declining a bit, but yet we are very happy with the numbers we are releasing tonight. If you do remember, just take a step back. 1 year ago, Q3 2020, we did achieve at that time a record high quarter in Q3 2020. If you do remember, in Q3 2020, we delivered a 9% top line growth, high gross profit margin, record high OP, and net profit exceeding 2 billion. Okay, so we are very pleased to release in Q3 21 a growth in top line and gross profit versus this record high Q3 2020. So the sales stand at 35.5 billion baht, growing by 2.2%. That was in line with our expectation. Same situation as in Q1 and Q2, we have very different situation by category. You can see the frozen business have been growing a lot by 11%. We have a very strong rebound in the food service business again. The pet care, value added and others are also growing a lot by 11.4%. The ambient sales are normalizing by 8%. So here we have a very similar situation compared to the one we had in Q1 and in Q2. Gross profit, we stand at 6.4 billion baht. In terms of gross profit margin, we are at 18%, slightly reducing versus Q3 2020, where we're at 18%. But you will see overall, the frozen margins are really recovering and in fact are almost record high in Q3 21. The pet care and value added margin are dropping a bit. I will explain that we had to face in Q3 2021 with some factory closure. So we have some extra costs coming from this one impacting negatively our gross profit margin. And then the ambient margin are still quite healthy and stable. OP, we are just below 1.9 billion baht. OP margin at 5.3 billion baht. You will see this is one of our key highlights for tonight. We have an increase of our SG&A. And we have record high SG&A at 12.7%. SG&A to sales ratio, we had to face with some very high logistic costs. If you do remember, we already mentioned this one in Q1 and in Q2. In Q3, where we disclosed the amount we estimate on this one, but indeed we are facing some very high logistic costs and very high SG&A. So because of this one, our OP overall is declining a bit compared to last year. Below the OP, I believe we have some good news overall. It's almost on track versus last year. We have some strong FX gain, but we have some negative impact coming from the share of loss. I will again get back to this one. So overall, compared to last year, we are declining a bit by 5.8% compared to the record high 2 billion baht we had last year. But overall, the feeling of the management here is we are very pleased with this Q3 performance, and I think it's a good track and in line also with our Q1 and Q2 performance. Moving on to the 9-month picture. So of course, you know, H1 was really great for us. We delivered record high H1, so you can see the 9-month picture is very interesting. From the right to the left, you can see total sales are increasing by 3.6%, gross profit by 7.5%, OP by 6.7%, EBITDA almost by 15%, and net profit by 27%. Just want to highlight that now, after 9 months, we have been delivering a net profit of 6.1, almost 6.1 billion baht. Just to remind you that last year, we did achieve our record high net profit over 12 months by 6.2, okay? So already here, after 9 months, we almost achieve and reach the 12 months record high level net income of last year. So again, very strong performance. One watch out maybe to mention to you, which is on the net debt to equity. We have an increase on net debt to equity from 0.94 to 1.08. We will explain and elaborate on this one. This is maybe the only watch out that we have in terms of financials for this quarter. So next one, we just focus on here, our supply chain. And you know that in Q3, we have been facing some challenges in our supply chain. You can see here on the right, all the factories which have been impacted by the COVID-19 in Q3. We decided to close ITEL. So ITEL, you remember, this is a new name for Songkla Canning. We decided to close for 2 weeks the factory, and the production has been ramping up in Q3, and now it's back to normal in September. However, we had some hit in our pet care business in Q3, and you will see this one in the gross profit margin. The next one is TUS. Again, TUS, we decided to close the factory for 10 days, was reopened mid-December. The production again here is ramping up, okay? And the last one is a smaller factory we had in Vietnam, YCC, the whole region, all the factories were closed by decision of the government. So we just reopened at the end of September the factory, okay? In terms of size and exposure for us, the first one is the biggest exposure for us. However, we are able to remove and reallocate some of the volumes to our other factories. The second one is in the frozen business, and the third one is in the ambient and also frozen business. You can see here also on the left, the progress regarding our vaccination campaign. Overall, we are quite successful. We did some good progress in Europe, in the US. It's a bit slower in Thailand. However, there were some progress over the last weeks and months. But overall, we believe we have been managing quite well the COVID-19 situation. Of course, you are fully aware that this has triggered a situation of labor shortage in some of our factories, especially in Thailand. But despite all of these issues, and we have been facing with some issues in Q3, we are able to deliver some strong numbers in Q3. Next is an update regarding some investments we have been announcing over the last weeks. The first one on the left is 10% acquisition we announced at the end of September on a company called R&B Food Supply in Thailand. This is a listed company. The value of the acquisition is roughly 3 billion baht. Thai Union will have a board seat on this one, so we will be able to record this one as an associate company. So starting from Q4, we will be able to record 10% share of profit coming from this company in our P&L. We believe we could have some very interesting synergies. This is a company which is focusing on the food ingredients, very successful company. They have also some nice opportunities in the CBD and in the hemp markets. And you can see here, we believe we can develop a lot of synergies with them. Okay, we have been working with this company already since many years. We have been sourcing some ingredients from this company, but we believe we can do more with them. On the right, you can see this is a joint venture we just announced with Starflex. So we said we will set up a new company. We have our subsidiary called Thai Union Graphic. We just set up a new holding company, 50-50, but in terms of common shares, Starflex will have the majority of the vote. And the goal of this new joint venture will be to focus on the flexible packaging. You know, we have a very clear roadmap and a lot of sustainability targets in terms of packaging. And we believe this partnership will help us to focus and to achieve our sustainability targets related to the packaging. Next one, I'm sure you heard about this one. This is Tfm Listing. We just listed this one at the end of October. It was a successful listing. We are very happy about this one. We have been talking over the last 2 years, so very happy to see the end of this process. On this one, you all know Tfm. I hope it's our feed business in Thailand. We are operating in Thailand, but we have also now some factories in Indonesia and also in Pakistan, and we have one partner called Avanti in India. Avanti feeds on this one. So we were owning before the IPO 67% of the shares. After the IPO, we still own the majority, so it doesn't change anything in our numbers. We still record all the sales until the OP of this company. We own 51%, as we were owning already a few years ago. The only change would be an increase in the future of the allocation to the non-controlling interest. That would be the only change. There is no impact in Q3. On this one, you can see here, we did write the accounting impact we expect to have for Q4. So first of all, we will record again on the sale of the investments. We will record this one through equity, not through the P&L. So we'll have something like 200 million baht gain coming from the sale of the shares we are owning. Plus also we will be able to record a 1.5, almost 1.5 billion baht cash inflow coming from the IPO proceeds. Very happy again about this one. This is the end of a quite long process. So moving to the Q3 key takeaways. Again, we told you we were very happy with the top line and the gross profit margin, and then we are a bit penalized by the SG&A, the high operating costs and the high freight costs that we have to face with in Q3, and we have also some lower share profit. So just get back to the top line. So top line growing by 2.2. Again, the key categories are frozen and pet care and value added, while the ambient is normalizing. We are also helped by the FX in Q3. In Q3, the Thai baht has been depreciating a lot versus USD, GBP, and Euro compared to Q3 2020. So if you exclude this FX impact, we are declining by 1.2%. So it's a fact we are just declining, excluding the FX. However, overall, we believe it's still a very strong performance. Gross profit margin, Amy will elaborate a bit further on this one, but overall, very strong in all the categories. We have a bit of a hiccup in the pet care and value added, explained by the closure of one factory. SG&A have been increasing again, the logistic costs, and we have some additional expenses due to the COVID-19 in Q3, and that's why our OP stands at 1.9, decreasing by 5.7% year on year. Share profit, we have a mixed picture here. First of all, Red Lobster is almost in line with last year. We have a share of loss of 63 million baht, very close from last year at 54. And then we have also some declining contribution coming from Avanti Feed and Avanti Frozen. So overall, our share profit is declining compared to last year. I will elaborate further on the Red Lobsters. But overall, bottom line, we believe our net profit is very healthy. At 1.9%, we have a decline compared to last year by 5.8%. But we believe the explanation are really coming from the higher freight cost, the workforce capacity issues, and also some of our factory closure in Q3. And again, very pleased and very happy about this performance overall. If you look at the long-term view over the last 4 years, I think we have a very good track record. We have been delivering some top-line growth over the last 7 quarters in a row, and we have a gross profit margin which is very stable, around 18+% over the last 6 quarters. Okay, this is a very strong performance, and of course you can see the impact on the net profit. Net profit has been very high since the beginning of the year, and we are still enjoying this one. Next slide. Of course, one of the consequences, we are benefiting from higher rating from the credit agency. You can see on the right, if I start with the right, it is the first time we are asking for the Japan Credit Rating Agency to provide us with a rating. We were providing with A- with a stable outlook in August. We are very happy with this one. Maybe you don't know, but A- is also the rating for the sovereign rating for Thailand. So this is very high, and we believe this is a very strong recognition about all the efforts of Thai Union over the last weeks and months on this one. We have been provided also with the TRIS rating. Again, we are at A+, no change compared to the rating before. However, there is a revision on the outlook to positive. This is good. We believe, again, this is strengthening the financial profile that we have. We have some improvements in our leverage ratio, and our profit margin, as you could see in the previous chart, has been improving a lot over the last quarters. So again, very happy about these ratings overall. Next slide is our journey to sustainable finance. And you know, we have been clearly a leader on this journey. You can see starting from 2020, all our net debt was traditional. And then 2022, we moved to 50% of our net debt coming from sustainable finance. And the goal is to move to 75% in 2025, okay? And you can see just below what we have been doing in Q1 and also in Q2, the 12 billion baht SLL, sustainability linked loan, we have been issuing in Thailand and in Japan was very successful. And then in July, the SLB, sustainability linked bond in Thailand, it was a lot of success. I don't get back to this one because we already elaborate on this one in Q1 and Q2. However, you can see on the right, we will announce very soon that we issue 6 billion baht SLB in Thailand. Again, a lot of interest from the finance community, a lot of oversubscription. You can see here we have a mix of 5 and 10 years maturity. And you can see the interest rates are between 2.27 to 3.36%. So very attractive financial interest for us, and we believe this is good. We are also working on the last wave, which will be SLL in Japan, and which should happen before the end of the year. Overall, you can see a lot of progress which I've been doing over Q3, and in 2021, I think it's clearly a step change for Thai Union. So next one, just to show you also the way we do manage our portfolio. Okay, and two announcements on this one. The first one on the left, we have been selling our joint ventures in Middle East. We have 2 different businesses. We have been selling them back to our joint venture partner. Maybe you know that since September 2015, we had set up 2 joint ventures in the Middle East, together with another large food company, local one. However, the results from the joint venture were not aligned with our expectation. And you know that since few years now, we are quite active and we try to fix our issues. And we took the decision to remove and to sell these 2 businesses to them. In terms of financial and accounting impact, there is almost nothing in Q3, it's very small. So we don't need to mention this one. The other one is related to Europe on the right, and maybe you have seen the press release on this one. Our subsidiary, Thai Union Europe, announced the first day of October that we will close a factory that we have in the chill business, called Meralliance Poland. We have been facing with a lot of difficulties with this factory over the last 2 years, and basically we have some issue. We don't have enough volumes for this factory. And this is why we took the decision that we will close or sell this business. We are having different discussions with local players on this one. The announcements happened in October, so there is no impact in our Q3 numbers. Right now, we are having discussion with different players to see what do we do. Just for you to keep in mind, the key factory of our chill business is located in France. There is no impact from this one, so overall, the impact in our numbers will be pretty small. Here we are talking of quite a small factory. Next one, we just wanted to give you some heads up and some watch out regarding some issues we are facing. And I'm sure it will not be new for you. A lot of businesses are impacted by these kind of challenges over these quarters and this month. You can see on the left here, you have the rising freight costs, and we are also facing the situation of container shortage and fuel cost issues. It's not new. We had already the same situation happening in Q1 and in Q2. I told you that I was expecting some improvement to happen in Q3 and in Q4, and we didn't see the improvement. And in fact, we are seeing a deterioration, and the impact has been increasing further in Q3 compared to Q1 and Q2. So if you do remember, we told you in Q1 and Q2 roughly the same impact by 200 million baht each quarter. Q3, you can see the impact, the price impact of the freight cost increase. We estimate this one at 468. Okay, so it's increasing a lot compared to Q1 and Q2. Few things on this one, few considerations. First of all, until now it was mostly an issue for Thailand and the US. Now Europe is also involved with this one. Plus you can see an increase of this cost because our frozen business from Asia to the US or to Europe has been increasing. So our exposure has been increasing. And you can see here, the team has just provided with two charts. The first one on the left, this is the cost of a container from Thailand to the US. You can see the increase since Q1 2020, increasing a lot and times 3 or 4. And then also the transit time between Thailand to the US has been increasing a lot between 2019 and 2021. So this is really the first issue, and we are fully impacted by this one in our Q3 numbers. On the right, you can see the inflation, and there were many news on this one in the press release. So we are facing with strong increase of the cost of the packaging and the oils, sunflower oils, and also some others. So we are facing with some increase in our COGS, okay? Right now, we don't see a lot of impact from this one in 2021. However, it's a watch out for us, not only for us, but for the whole industry. We do expect to have some increase in 2022. What does it mean? It means we'll have to negotiate some price increase with our customers, and there may be some impact in our next year profitability. It's not specific to Thai Union, of course. The whole industry is talking about this one, and I'm sure you have seen all the other food big players already communicating on this one. And of course, our policy is we try to share the cost with all our partners, all our suppliers. Again, the impact, despite all these challenges, and there are some real challenges in Q3, we are able to deliver a very solid performance. So very happy about this one. Next one, I will hand over to Amy to go through the fish price.
Thank you, Ludo. For tuna prices overall increased versus prior quarter and declined versus last year. $1,400 per ton in the third quarter was aligned with our expectation, and the price in October increased to $1,500 per ton, stable and within our manageable range. Next, please. Sales, including FX, revenue grew 2% in Q3 21 versus last year, mostly from our diversified products. The frozen continuing strong performance in US and Asia markets started to improve in the third quarter. Pet care and value added steady growing in 7 consecutive quarters. Ambient is normalized after last year pantry stock up during COVID pandemic. And for 9 months, 2021, top line grew 4% and 10% improved when you compare to pre-COVID in 2019. We'll take a deep dive for revenue component in the next slide, please. Ambient segment dropped primarily from lower demand in canned products. The peak demand last year did not repeat this year, and all regions are back to normalized as anticipated. This reflected 8% decline in sales and 13% volume drop. Frozen and chilled grow in most categories except for salmon. Total segment increase in value 11% and volume 8%. Food service and culinary channel are continuing recovery with strong momentum in sales, and our pricing has been firm with the effect of imbalance in demand and supply, despite the dampening effects of COVID-19. Revenue quality in pet care and value added have been improved, as shown by 9% sales increase in pet care and 8% increase in value added, whereas combined volume dropped 10%. This was driven by favorable mix and growth in the US market. FX impact was favorable in this quarter, both USD and Euro. And if you compare to pre-COVID, revenue increased 12% in Q1 21. Next slide. For 9 month focus, our sales increased in all regions. USA increased 7% year over year from strong demand in food service and positive FX. The geographic proportion increased to 43% from 42% last year. Domestic sales increased 4% thanks to frozen business supporting hospitality sector and retail. Europe sales increased 2% driven by resilient demand in ambient and positive effects. Next. Looking at the gross profit, 6.4 billion for the quarter, increased 1% versus last year, and gross profit margin consistent 18% versus 18.2% last year. Focus on segment. Food service has been recovery, and we have continued to participate in this recovery in a meaningful fashion. We offer great food variety and penetrated our products into markets where can be best reach our customers. As a result, margin has been growing. Pet care was one segment that faced the temporary lower capacity from Songkla canning or ITAL closure for 2 weeks and the freight inflation. Margin dropped a bit in this segment. Ambient normalizing effect with lower volume in US and domestic, but our margin remains strong and consistent to prior quarters. For 9 months 2021, margin combined was strong 18.2% versus 17.6% last year and 15.9% in 2019. Next. Operating profit 1.9 billion in the third quarter, 6% drop year over year. The logistics challenge continue. Like Ludo mentioned, in the first and the second quarter, we saw the freight rates increase at about 200 million each quarter. The magnitude was higher in the third quarter, and the freight increased to approximately 470 million, and that directly impact our operating profit performance. We keep an eye on the situation, and at the same time, we mitigated this rising cost by control marketing and other fixed expenses. And for 9 months 2021, SG&A increased 7%. Next. EBITDA for the quarter, 2.7% decline to 3.8 billion due to low operating profit. Our non-operating expenses were favorable, driven by the FX gain explained by Thai baht depreciation. This offset by lower share of profit, mainly from first the Avanti business was affected from COVID outbreak in India that lowered the production capacity and the recall products that were exported to the US. Second was from Red Lobster lease accounting adjustments that reduced our share profit about 100 baht per quarter. And note that this is the accounting treatment and no impact on cash. But in terms of Red Lobster operations, it was right on track and comparable to last year, which Ludo will elaborate on that. 9 months, EBITDA 11.3, increased 15% year over year. Next. Net profit 1.9 billion, reduced 6%. The business environment in this quarter was challenging. We were facing some labor shortage in Thailand facilities, some longer shipping lead times, as well as some freight rate increase. With these have pushed our production costs and selling expense to increase across a number of different categories. We look at this as a short-term disruption, and business will be improved in the year to go. Regardless of challenging environment, our 9-month net profit was high at 6 billion, 27% improved year over year. Next is the adjusted net profit. Last year in Q3, we adjusted negative 199 million for goodwill and related tax due to the fire incident in our Canada facility. And this year in Q3, we adjusted 63 million insurance income for the fire incident in Canada, and adjusted net income in this quarter was 1.88 million. Next. Earning per share for the quarter, 0.40 baht, 4% drop year over year due to lower profit. And for 9 months, 1.26 baht per share, same level of our record high in 2020, which is improved 32% year over year. Next will be Red Lobster. I'll turn it to Ludo.
Thanks a lot, Amy. So this is our usual table regarding Red Lobster performance. Just for you to remember, the first line, we have our share of loss or share of profit coming from Red Lobster. The second line is the new thing we have since Q1 21, the impact of the lease accounting adjustments, and the rest are all our usual lines. Okay, so you're looking at the share of profit. We have a share of loss in Q3 21 by 63 million baht. We are quite close from Q3 2020, where we delivered 54 million baht. The performance in Q3 2020 was quite good from Red Lobster, and we are doing almost the same performance. The share of profit, we told you the impact will be something around 100 million baht share of loss by quarter. We have this, and this will continue going forward. Other income, we have been increasing a bit. We are benefiting from some management fees in Q3 21, and then we have the usual interest expense and income tax. So overall, we confirm the very strong recovery of Red Lobster. We are far away from the losses that we have been delivering last year. In 2020, if you do remember, the situation is much better. We have all the restaurants which are fully open for dining halls and off-premise. So this is really good, okay? However, we want them to get back to profit, okay? So we have a very strong plan, and maybe we move to next slide. Here, we just wanted to share with you the top priority for Red Lobster is really to increase the guest count, okay? We want to drive the profitable guest count growth, and we have different points to address this one. The first one is we want to improve the menu satisfaction. We believe we have some very good meals in the menu. However, we want to have more very strong meals and a lot of satisfaction coming from the different consumers. So we are working very hard with Red Lobster people on how to improve the menu. We are also working very hard on the execution. This is a challenge, of course. You know that we did increase and we did hire a lot of people at Red Lobster in the beginning of the year. So we have a lot of new joiners, really a lot. So of course, we need to do a lot of training to make sure that the staffing and all the people working in the restaurants, they are very efficient in the food preparation and in the service. And you know, these are two of the key requirements. When you go to a restaurant, you want to receive your food very quickly, and you want the quality to be really good. So again, we are doing some investments since the last 2 quarters on this one to really step up in terms of quality and in terms of execution. We believe this is really key in our strategy to turn around Red Lobster. Off-premise business, I don't comment that much. We did already comment a lot in Q1 and Q2. We are also pushing very hard on that. If you do remember, I told you before the COVID-19, my own assessment was Red Lobster was a bit late compared to competition. I do believe that now with all the changes we have been implementing in 2020, now we are ahead of the competition, and we have a very good proposal regarding the off-premise business. Something which is very important is also to create everyday value. What do we mean by this? The people returning back to the restaurants, first of all, some of them has been losing their jobs. The economical situation in the US for some people is not easy. So they are really looking for value. And this is why we have some specific proposal with low price menu or low price item, just to make sure we can attract all these people here. The last part is related to marketing. You know, in 2020, we cut a lot of our marketing investments to face with the COVID-19 situation. Now we are back. We are spending a bit more in terms of marketing spending. However, we are shifting our spending to digital activities. And the idea, we have a very strong database already with 11 million customers. The idea for us is to grow and to really try to monetize this database. So overall, we have some good progress at Red Lobster in Q3. However, we are still loss-making. I think the big challenge for us will be Q4. You know, in Q4, Red Lobster is always loss-making quite heavily. We maintain for the time being our full year target for Red Lobster share of loss, which is, we said in Q2, between 200 to 300 for the full year. We maintain the same guidance for Q4. So we do expect to have a significant loss happening in Q4. Of course, we try to do whatever we can to decrease and to limit as much as possible this impact. And now we'll hand over to Amy for the focus on the free cash flow.
Thanks again, Ludo. So we generated 9 months cumulative of 2.1 billion free cash flow from operations. The first quarter cash flow was 125 negative from high level of inventory that was impact from the container shortage started in December 2020. Second and third quarter cash flow were positive. Profit was strong but penalized by higher net working capital due to high level of inventory from logistic disruption. A note for net working capital in Q3, high level of trade receivable were included thanks to incremental sales, and that impact high net working capital level in short term, which will turn to be cash in the year to go. Next. For net debt bridge, our debt increased to our net increased 11 billion to 63 billion at the end of Q3, driven by, if you look at the bridge, our profit increased 11 billion in 9 months, but offset by 6 billion increase in net working capital and 2.6 billion capital investment, which we believe it's a good, healthy level. And for the investing and financing activities, for the first 9 months, we distributed 6.3 billion combined for tax, interest, and dividend payments. Other investment combined are about 7 billion to support our commitment in innovation and operations improvement. Majority investments are first 1.7 billion invested in Rugenfish, as we mentioned in the last quarter. Second, 3 billion in R&D food supply. And we have some 700 million in Clover, the tuna oil company in Australia that we announced last quarter. And we also invested small amount, 60 million in the startup food tech companies. As a result, net debt per equity increased from 0.94 to 1.08, and that is within our target range of 1.0 to 1.1. Next.
Amy, maybe let me jump onto this one. Maybe just one comment on this one. Indeed, we have an increase of our net debt in Q3. We believe for us it's not a concern. We told you that our guidance 1.1, we are still below the guidance. Just to insist, over the 9 months, we are delivering a record high EBITDA, but indeed you can see we have this box change in net working capital, which is higher compared to expectation. I think we are facing really a unique situation of the freight issues, the container shortage, and because of this one, we have our level of inventory growing in many locations, in Asia, in the US, and also in Europe. But this is also a decision we have made. We want to support our business, and we believe right now the momentum is very strong for all our activities. So we took the decision to say, okay, we are ready to increase our level of net working capital, even if it's penalizing for cash flow, but really want to support our business. Plus, I told you in Q2 that we were ready to do some investments, and you can see here on the top right, you can see the box on the investment, and Amy already mentioned this one. We did some few investment over the last few months. So these are the key drivers for our net debt. However, this is fully under control, and we are quite happy with the development on this one. Of course, in Q4, we will try to decrease the requirement of net working capital. However, we want to fully support the business. This is very important for us, and we are facing with a unique situation. It's just a fact. Okay, back to you, Amy.
Okay, on interest-bearing debt, not changed from prior quarter. Exposed more on various currencies through the sustainability facing programs. As you can see, our fundings were more exposed to USD, Euro, and Japan yen than the year before. Next slide. So the overall performance that turned to return on equity and return on capital employed improved versus last year and on good tracking. And if you look at the inventory days, the days increased to 135 days from 126, mostly from the higher level of inventory, like Ludo mentioned, which also drove net working capital days to 116 days from 108 in the prior quarter. And then I'll turn the presentation to Gail.
Thank you, Khun Amy. We start with raw material prices. Tuna price in third quarter remained relatively stable at $1,400 per ton, so dropped 7% year on year. And in October, tuna price was up a bit to 1,500, but this is within our manageable range, as Khun Amy mentioned. For 10 months, this year to date, tuna price remain at low level. If you compare to the same period of last year, it's about $1,300 per ton. And shrimp price in third quarter declined 12% year on year. In October, shrimp price increased to 143 baht per kg, but that was typically the entering into the higher season for the shrimp raw material price in fourth quarter of the year. So 10-month shrimp price still lower compared to the same period of last year. Last is on salmon price in third quarter remain stable, both for third quarter and for the October. So 10 months, salmon price remain in our budget. Next is on the foreign currency. Thai baht weakened against US dollar by 5% year on year, against euro percent weaker by 6% and pound by 12% year on year. So FX rates for Thai baht still support our sales growth for 9 months. And next is on the three core business. Compared to third quarter last year, we saw a higher sales portion from frozen and chilled seafood and pet care and value-added business unit, while ambient sales portion normalized. So the portion of the brand and private label have not been changed. Next is on our performance. You can see from the right is for 9 months, it's growth 3.6% from last year and almost 10% if you compare to the pre-COVID-19. And our gross margin has been in upward trend. So we go more details on each business. For the ambient sales in third quarter declined 8%. We already mentioned on the lower tuna sales in the US, Europe, and Asia, that to reflect the exceptional high last year, and of course some effect from ongoing container shortage. However, if you see the gross profit margin, it's remained high and stable at 20% plus. So thanks to our lower raw material price and improving in sardine, mackerel, and salmon businesses. So of course, compared to pre-COVID-19, both sales and margin increase. On the frozen and chilled seafood, this one is very outstanding. We see recoveries about 11%, and that's supported by the sales volume growth as well. So shrimp and lobster business unit were the key growth. So we see substantial improving in food service and retails in Asia and in the US. And that's the result of the gross profit margin recovery, very strong to 13% this quarter compared to 11% third quarter last year. So both top line margin expand very strong, and of course that from shrimp and particularly lobster business. Last is on the pet care and value added. Sales increased 12%. We did have the new product launch. We do have the customer base expansion, higher sales of the value added products, and of course we have the greater performance of the packaging business. However, for the gross margin, it's lower to 23.6%. That because of the short-term disruption for the lower workforce capacity. We already mentioned on the temporary factory closure in Songkhla province, Songkhla Canning in the South Thailand, and also some higher freight costs of pet care products to impact our trading business unit in the US. So if we compare to pre-COVID, we see expanding of top line margin. When we go to the geography, 9-month sales portion increased slightly for North America. So thanks to the recovery of the frozen and shrimp seafood business. And the rest of the world, the portion increased slightly as well, that from frozen and shrimp and also pet care and value added. So North America, I already mentioned, Thai baht depreciation against the US dollar also support the top line. And of course, we still see the solid performance compared to pre-COVID-19. For the Euro sales, it was decline in organic sales due to lower volume. We see lower volume in France, UK, and Germany because last year they have a high base of their pantry loading. In Euro, we have the support from Thai baht depreciation against Euro and pound that already support our sales. And lastly, of course, to pre-COVID, we see the strong demand compared to pre-COVID. For Thailand, sales still down 6%, despite we see a recovery of frozen and chilled seafood, but of course, it's declined from the ambient sales last year, a high base last year. So Thailand sales remain challenged compared to pre-COVID-19. Lastly, on the sales in emerging and the rest of the world, sales in China and Japan grew 36% and 2% year on year. That's supported by the frozen and pet care and value-added business. Some slight decrease in the Middle East. So again, this business segment remains challenged compared to the pre-COVID level. So overall, this quarter, we deliver consistent high gross margin. To sum up for you, margin recovery for frozen and chilled business, resilient for the ambient seafood, and of course, some temporary margin drop from pet care and value-added business. For our this year financial guidance, we adjust only on the CapEx. You can see this one, we lower from 5 billion to a range 4 to 4.5 due to a postponement of CapEx into next year. The rest, we maintain our sales forecast 3 to 5%. Gross margin 17 to 18, and lastly, we confirm our dividend policy at least 50% payout ratio. So this is wrap up our presentation.
Kungel, just one thing to add maybe on the capex to make it clear.
Yeah.
The amount we indicate here, it's a net amount. We have in Q3 we sold a piece of land in Thailand for 400 million baht, so 0.4 billion baht. So the capex you see here, it's a net capex of this amount. So if you want to have the gross capex, you have to increase the 0.4. And this is also part of the reason why we are revising down our guidance, just to make it clear for everyone. Apart from that, the guidance remains all the same for the full year.
Okay, and that's sum up for the presentation. Now we would like to open the floor for the Q&A. For any participant who have inquiry, please submit the question in the chat. Or you can raise your hand and unmute your microphone if you want to raise the question by yourself. So now please allow me to raise the first question. What do you have for the 1.48 billion baht cash from TFM IPO?
So here we don't have any specific plan for this one, so we are benefiting from this one in Q4. You have seen in Q3 we have an increase of our net debt, so we will first use this one in order to reduce our net debt. You have seen also in Q3 that we are open for opportunities for investment. Okay, so we always have different projects and different targets to look at. We look at this one, nothing specific to share with you tonight, but overall we will be using this cash income for delivering our net debt.
Next question, can you elaborate more on the margin enhancement for frozen seafood? Will high gross profit margin be able to sustain as a result?
I think one of the key difference in Q3 in the frozen business is we see a lot of recovery also in Asia. If you do remember, In Q1 and in Q2, I told you that the key driver was really the US, very strong recovery. In Q3, we still have some growth in the US, but maybe it's a bit less dynamic than what we had in Q1 and Q2. The key change happening in Q3 is coming from Asia. Asia is very dynamic from a frozen point of view. And yes, we do believe that the positive momentum from the frozen business will continue in Q4, both from the Asia and also the US market. I told you at the beginning of the year in Q1 that the margin, especially in the US, were really exceptional because we were facing a situation of unbalanced market between supply and demand. And we told you that the situation was not sustainable. For sure, it will stop at one stage. So right now in 2021, we are benefiting from exceptionally high gross profit margin. However, we do believe this one will continue in Q4. And we do expect some normalization to happen in 2022. So yes, the strong momentum of the frozen will continue in Q4. This is right now our forecast.
More questions on the frozen and ambient seafood business. We see a recovery of frozen seafood business as well as a normalization of ambient seafood business in the second quarter and third quarter. This trend would continue in the fourth quarter and 2022 or not? How? Could you give a guidance?
Maybe I take this one also. So the frozen, we already mentioned about this one. And I told you, yes, the frozen, we believe will continue in Q4. Will the gross profit margin of the frozen be as high in Q4 than in Q3? We don't know yet. It was almost record high at 13% in Q3. A few years ago, we get back to our numbers. We did achieve one quarter 14%, so this is not record high. However, as long as we are between 12, 13%, we are very happy with our frozen performance. Ambient, you have seen that in Q3, we have again our normalization. It's not a surprise. We told you at the beginning of the year that we were expecting some normalization to happen during the whole year. So what we have seen since Q1 should continue in Q4. So overall, we have been enjoying a very nice gross profit margin in Q1, in Q2, and Q3. We do believe it will continue in Q4. Please remember that in Q4, usually we have a small decline of gross profit margin. This is coming from our seasonality. We are selling in Q4 usually more frozen products and less ambient products. So usually you always see in Q4 a small decline on our gross profit margin. However, you have seen that our overall guidance for the full year was maintained between 17 to 18%, and we believe we will deliver the high range of this guidance over the full year. 2022, we don't provide yet with any guidance. We are working right now on the budget. We have some first visibility. I told you we have some challenges and some watch out on some inflation coming from the packaging, also coming from some oils. So we have to face with this one. We do believe the freight situation will continue in 2022. We expect the situation to continue at least in H1 22, and we do expect to see some kind of normalization to happen in Q3 and in Q4 22. Of course, on this one, I want to be a bit careful because I told you in Q4 2020 that I was expecting some normalization to happen in 2021. I was wrong. Nobody could expect the situation would be so long on this one. However, you could see that we were able to face with this one, and we were able to manage the situation in Q3 and in Q4.
Okay. What is the store sales growth and total store sales growth for Red Lobster in the third quarter 21 and 9 months 21?
So we don't disclose specific numbers from Red Lobster. I think we are already very transparent with the contribution of Red Lobster, but we don't disclose the sales or the net income or the EBITDA of Red Lobster, and this is the same situation since the beginning of the year. What you could see through the numbers we have been communicating is overall the situation has been completely turned around compared to last year. Okay, we are miles away from the very difficult situation that we had in 2020. However, we are still delivering a loss. Okay, and we are not happy with the loss at Red Lobster. We want the situation to turn around to be a profit. It will be a challenge. We know it will take some time on this one, but we work very hard with the team there to improve and to turn around the situation to get back to a profit over the full year. It will not be the case in 21. Again, our full year guidance is still between 200 to 300 million baht for Red Lobster. For the full year, you can see over 9 months, we are almost at break even, slightly negative. for Red Lobster. So it means that the share of loss is expected to be quite large in Q4. Of course, we want to decrease this impact. There are some specific activities happening right now at Red Lobster in order to try to maximize the share of profit in Q4. However, they are always facing with a low seasonality in Q4, and it will continue in 21 and for the next years.
Would it be possible to quantify impact in Thai baht term on your sales and costs from factories closures during the third quarter 21?
So this one, honestly, we try to do it honestly, but it's a bit difficult to do. Why is it difficult? Of course, it's very easy for us to give you the impact for one factory closure. This is easy to manage. However, you know, we have quite a strong network, and we were able to reallocate some of these volumes of these closed factories to some other factories. So at the end of the day, we don't want to provide you with a gross amount, because net, we have been able to reallocate some of these volumes to some other factories. And the issue we are facing is with the freight cost and the container shortage issue. The situation in the supply chain is overall a bit challenging, okay? So definitely, yes, we have been impacted in Q3. We have lost some sales, or we have been delaying some sales. And especially also, we have been facing with some increasing costs in our COGS and also in our SG&A. Why? Because we have to pay some extra bonus for the people coming and working in these difficult conditions. And also we have some increasing operating costs during these conditions, okay? However, again, the key message is we are able to face and to manage this difficulty. And even despite all these challenges, and there were some challenges really happening in Q3, we are able to report a very healthy performance in Q3.
With loss target for Red Lobster in 2021 of 200 to 300 million baht, that means Red Lobster loss in the fourth quarter 21 could be lower than fourth quarter last year of 321 million baht.
Yeah, I think this is very simple math, but I think this is correct. Our ambition is we want them to increase year on year every quarter. So yes, in Q4 2020, they did deliver quite a significant loss by 321. We want them to deliver a lower loss in Q4 2021. Again, it will not be easy because of their seasonality. However, we have launched some initiative. Let's see how the numbers. But yes, the ambition is they will be improving. And full year, we have an ambition between 200 to 300 million baht coming from Red Lobster.
Next, can we assume volume growth recovery for pet care in the fourth quarter 21 compared to the third quarter 21?
So we told you that in Q3 we have been facing a unique situation with the closure of SCC. At this stage now, all the factories are up and running and back to normal production. So yes, we do expect to see some recovery in pet care. One watch out, we are still facing with the issues on the logistic costs, and hopefully we can improve. But yes, there was some volume being delayed from Q3 to Q4. Now we need to see the situation at the end of 2021. We could face also some delay from the end of the year to beginning of next year. But however, yes, we do believe that the pet care performance will improve. We do expect that the gross profit margin especially was a bit low. It's very high, of course, but it was a bit low compared to historical track record, and we do expect to normalize this in Q4. Keep in mind that the numbers we have been disclosing for the pet care and value added, we are still growing a lot in Q3, despite despite this closure from one factory. So we do believe we are quite happy with the situation. And again, some challenges in our supply chain, but we are able to manage and to face with this situation.
Okay. Now we don't have more questions.
One question.
Somebody is raising the hand, no?
Okay. I saw Kun Chatri. You unmute your microphone, please, to raise the question.
หรืออันนี้ไม่ได้
No more hand raised.
No more.
Any more questions we may have?
Yes. Before we ending the session, Kuludo, would you like to leave any message for the investors?
No, maybe just a quick one in a summary. Again, we are very happy with Q3 performance. We are facing with some challenges, not only Thai Union, but all the businesses you have seen, the container shortage, the freight costs, the inflation. We have some challenges. We face with some challenges in Q3. We have some others in front of us, but overall, the momentum is really strong for the company and for the group and all our activities. We believe Q4 will follow the same trend. I think we are very pleased, especially with the bottom line. The fact that we have achieved in 9 months almost the same performance than last year over 12 months is very encouraging for us, okay? So we believe the momentum is good. We want to push. We want to achieve a record high year for the whole year 2021. We are very confident. We are working right now on the plan for 22. There will be some challenges. This is life, but there will be also a lot of opportunities for our business, okay? That's it.
Okay, and this concludes the virtual earnings call for Thai Union Group's third quarter of 2021 result announcement. Thank you very much for your time and interest in participating the event today. And we would like to invite you all to join Thai Union Group's analyst meeting tomorrow morning at 10 a.m. Our CEO, Khun Thirapong, will also host the event with the company's strategy and key development updates. If you have any further questions, please feel free to contact our IR department. We wish you have a good day and night. Thank you very much.
Thanks to all. Stay safe. See you. Bye-bye. See you tomorrow.